What is the future of cryptocurrency in 2024? This is a question that many people are asking, as cryptocurrency has become a global phenomenon, attracting millions of users, investors, and developers. Cryptocurrency is not only a new form of money, but also a new way of thinking, creating, and collaborating. So here in this video, we will discuss the future of cryptocurrency in 2024. The video is going to be very informative and interesting. So subscribe to our channel now and hit the bell icon for regular updates. Let's get started. Overview of cryptocurrency landscape in 2024. The cryptocurrency landscape in 2024 is expected to be more diverse, dynamic, and regulated than ever before. The industry will witness increased institutional adoption, innovation, and competition, as well as new challenges and opportunities. The Bitcoin halving event, which will reduce the block reward from 6.25 to 3 Bitcoins, creating a supply shock and potentially driving up the price and demand for the leading cryptocurrency. The approval of the first Bitcoin exchange-traded fund (ETF) in the US, which will provide a more accessible and regulated way for investors to gain exposure to the crypto market. Also, the implementation of the EU's markets in crypto assets regulation, which will establish a comprehensive and harmonized framework for crypto assets and service providers across the bloc. As you know, the emergence of new technologies and innovations, such as decentralized finance, DeFi, non-fungible tokens, NFTs, Layer 2 solutions, central bank digital currencies, CBDCs, and artificial intelligence, AI, which will offer new use cases, functionalities, and value propositions for crypto users and enthusiasts. The growing awareness and concern about the environmental impact of crypto mining, which will prompt more initiatives and solutions to reduce the carbon footprint and energy consumption of the industry. Driving forces behind crypto growth. Cryptocurrencies have grown exponentially in the past few years, reaching new heights of popularity and value. But what are the driving forces behind this growth? What are the factors that have propelled cryptocurrencies to the forefront of the digital world? Here we will discuss the three main driving forces behind crypto growth: global economic influence, technological advancements, and increased institutional adoption. Number 3. Global economic influence on crypto. One of the driving forces behind crypto growth is the global economic influence. Cryptocurrencies are influenced by the economic trends and events that affect the world, such as inflation, recession, trade wars, sanctions, or crises. Cryptocurrencies offer an alternative and a hedge to the traditional financial system, which is often unstable, inefficient, or corrupt. Cryptocurrencies also offer an opportunity and a solution to the unbanked and underbanked populations, who lack access to financial services or face high fees and barriers. Cryptocurrencies also enable cross-border and peer-to-peer transactions, which are faster, cheaper, and more transparent than the conventional methods. Some of the recent economic events that have significantly influenced the crypto market are the COVID-19 pandemic, which has caused a global health and economic crisis, and has increased the demand for digital and contactless payments, as well as the need for financial inclusion and resilience. The US-China trade war, which has escalated the geopolitical tensions and the currency wars, and has increased the uncertainty and the volatility of the global markets, as well as the interest in alternative and decentralized currencies. The rise of inflation, which has eroded the purchasing power and the value of the fiat currencies, and has increased the appeal of deflationary and scarce currencies, such as Bitcoin. Number 2. Technological advancements in blockchain. Another driving force behind crypto growth is the technological advancements in blockchain, the technology that underpins cryptocurrencies. Blockchain is a distributed ledger that records and verifies every transaction and ownership on the network, without the need for intermediaries or central authorities. Blockchain has evolved and improved over the years, becoming more scalable, secure, and efficient, to meet the growing demand and diversity of cryptocurrencies. Blockchain has also become more interoperable, allowing different blockchains to communicate and exchange data and value. Blockchain has also become more sustainable, reducing its environmental impact and energy consumption. Some of the recent technological improvements in blockchain that are shaping the future of cryptocurrencies are Layer 2 solutions, which are technologies that aim to reduce the congestion and the costs of the main blockchain by moving some of the processes off the main chain and onto a secondary layer. For example, Polygon is a Layer 2 solution that enables faster and cheaper transactions on the Ethereum network and has become a popular platform for DeFi and NFTs. Proof of stake, which is a consensus mechanism that aims to replace the energy-intensive proof of work by using a system where the validators stake their tokens to secure the network, instead of using their computing power to mine. For example, Ethereum is planning to switch to proof of stake, which will significantly reduce its energy consumption and carbon footprint. Sharding, which is a technique that aims to increase the scalability and the throughput of the blockchain by dividing it into smaller and parallel segments or shards. For example, Zilliqat is a blockchain that uses sharding to achieve high performance and low latency, and has become a popular platform for DeFi and NFTs. Number 1. Increased institutional adoption. The third driving force behind crypto growth is the increased institutional adoption. Cryptocurrencies have attracted the attention and the investment of more institutions, corporations, and governments who have recognized the potential and the benefits of cryptocurrencies. Institutions, corporations, and governments have integrated or invested in cryptocurrencies for various reasons, such as diversifying their portfolios and hedging against inflation and currency devaluation by holding cryptocurrencies as a store of value and an alternative asset class. For example, MicroStrategy, Tesla, and Square are some of the companies that have bought and held Bitcoin as part of their treasury strategy, enhancing their products and services and reaching new markets and customers by offering cryptocurrencies as a payment option or a reward mechanism. For example, PayPal, Visa, and MasterCard are some of the companies that have enabled their users to buy, sell, and use cryptocurrencies on their platforms, developing their own digital currencies or platforms based on blockchain technology to improve their efficiency, security, and innovation. For example, China, Sweden, and the Bahamas are some of the countries that have launched or are developing their own central bank digital currencies, CBDCs. Regulatory environment. Cryptocurrencies are not only a technological innovation, but also a legal and regulatory challenge. Cryptocurrencies pose many questions and issues that are not yet addressed by the existing laws and regulations, such as: how are cryptocurrencies classified and defined? Are they assets, commodities, currencies, securities, or something else? How are cryptocurrencies taxed? Are they subject to income tax, capital gains tax, sales tax, or other taxes? How are cryptocurrencies regulated across different jurisdictions and countries? Are they legal, illegal, or somewhere in between? How are cryptocurrencies enforced and resolved in case of disputes, fraud, or theft? Who is liable and responsible for the losses or damages? These are some of the questions that need to be answered, and they are not easy to answer. Cryptocurrencies are not only a new and emerging phenomenon, but also a complex and dynamic one that requires a balance between innovation and regulation, between freedom and protection, between risk and reward. Recent regulatory changes and their impact. The regulatory environment of cryptocurrencies has changed and developed over the years, as more regulators and policymakers have become aware and involved in the crypto space. The regulatory environment of cryptocurrencies has also varied and differed across different regions and countries, as different regulators and policymakers have adopted different approaches and attitudes towards cryptocurrencies. Some of the recent regulatory changes and their impact on the cryptocurrency market are: Number 3. The U.S. Securities and Exchange Commission, SEC, has issued guidance on how to determine if a cryptocurrency is a security or not, and how to comply with the securities laws. The SEC has also sued or settled with several cryptocurrency projects and platforms, such as Ripple, Telegram, and Coinbase, for violating the securities laws. The SEC has also approved the first Bitcoin exchange-traded fund, ETF, in the U.S., which will allow more investors to access and trade Bitcoin. Number 2. The European Union (EU) has proposed a comprehensive framework for regulating cryptocurrencies, called the Markets in Crypto Assets Regulation (MiCA). The MiCA aims to provide more clarity and consistency for the crypto market in the EU by setting common rules and standards for crypto assets, service providers, and issuers. The MiCA also aims to protect the consumers and the investors by imposing disclosure requirements, licensing obligations, and supervision mechanisms. Number 1. The Financial Action Task Force, FATF, has issued recommendations on how to prevent and combat money laundering and terrorist financing involving cryptocurrencies. The FATF has also introduced the Travel Rule, which requires cryptocurrency service providers to collect and share information about the sender and the receiver of cryptocurrency transactions above a certain threshold. The FATF has also conducted reviews and assessments of the compliance and implementation of its recommendations by different countries. The role of central bank digital currencies, CBDCs. One of the most significant and influential developments in the regulatory environment of cryptocurrencies is the emergence of central bank digital currencies, CBDCs. CBDCs are digital currencies that are issued and controlled by the central banks of different countries, and that are backed by the national fiat currencies. CBDCs are not cryptocurrencies, but they are based on blockchain technology, and they share some features and functions with cryptocurrencies, such as they are digital and electronic, and they can be stored and transferred online or offline, using devices such as smartphones or cards. They are programmable and smart, and they can be embedded with rules and conditions, such as expiry dates, interest rates, or limits. They are traceable and transparent, and they can provide more data and information about the transactions and the users, such as identity, location, or purpose. CBDCs are affecting the crypto landscape in various ways, such as, number 3, they are competing and coexisting with cryptocurrencies, as they offer similar or different benefits and drawbacks, such as convenience, security, privacy, or stability. Number 2, they are complementing and enhancing cryptocurrencies, as they enable more interoperability and integration, such as cross-border payments, exchange rates, or conversion. Number 1, they are influencing and inspiring cryptocurrencies, as they set new standards and expectations, such as regulation, innovation, or adoption. Market trends and predictions. The cryptocurrency market is experiencing rapid growth and innovation, driven by the increasing adoption of digital assets by investors, businesses, and governments. According to CoinMarketCap, the global cryptocurrency market size was valued at $826.6 billion in 2020 and is projected to grow to $1,902.5 billion by 2028. Some of the major cryptocurrencies that have gained popularity and value include Bitcoin, Ethereum, Binance Coin, Cardano, and Dogecoin. The future of cryptocurrencies is uncertain and depends on various factors, such as regulatory developments, technological innovations, security challenges, environmental concerns, and investor sentiment. Some of the potential market disruptors that could shape the future of cryptocurrencies include decentralized finance, DeFi, non-fungible tokens, NFTs, Layer 2 solutions, central bank digital currencies, CBDCs, and artificial intelligence, AI. Challenges and risks. Cryptocurrencies face several security challenges in the crypto space, such as hacking attacks, phishing scams, malware infections, human errors, and technical glitches. These challenges can compromise the integrity and availability of cryptocurrency networks and wallets, resulting in losses for users and damage to reputation for platforms. To mitigate these risks, users should adopt best practices such as using strong passwords, encryption tools, multi-factor authentication (MFA), cold storage devices such as hardware wallets, and reputable exchanges. Cryptocurrencies also face environmental concerns and sustainable practices due to their high energy consumption for mining operations. Mining is the process of validating transactions on a blockchain network by solving complex mathematical problems using specialized hardware and software. This process requires a lot of electricity and generates a lot of carbon emissions. To address these issues, some cryptocurrencies are exploring alternative ways of generating consensus without relying on mining or using renewable energy sources. Cryptocurrencies are also volatile and subject to investor caution due to their high price fluctuations and unpredictability. The price of cryptocurrencies can be influenced by various factors, such as supply and demand dynamics, market sentiment, news events, regulatory actions, technological innovations, security breaches, competition from other assets or currencies, etc. Investors should be aware of the risks involved in investing in cryptocurrencies, such as liquidity issues, price manipulation, fraud, theft, scams, etc., and only invest what they can afford to lose. Innovation and adoption. These includes the rise of DeFi. Decentralized finance is one of the most significant innovations in the cryptocurrency space that aims to provide financial services without intermediaries or centralized authorities. DeFi leverages smart contracts, which are self-executing agreements encoded on a blockchain network, to enable peer-to-peer lending, borrowing, trading, investing, insurance, etc. among users. DeFi has grown rapidly in recent years, attracting billions of dollars in total value locked (TVL), across various platforms such as Uniswap, Aave, Compound, MakerDAO, etc. NFTs, non-fungible tokens, are another innovation that has exploded in popularity among crypto enthusiasts. NFTs are unique digital assets that represent ownership rights over various forms of art, collectibles, gaming items, music, videos, etc. on a blockchain network. NFTs have enabled artists to create new forms of expression, collectors to acquire rare or exclusive items, gamers to enhance their gaming experience, etc., while also creating new revenue streams for creators. Some examples of famous NFT projects include CryptoPunks, CryptoKitties, NBA Top Shot, etc. Emerging technologies such as Aave have also played a key role in enhancing the functionality and performance of cryptocurrencies. I can help improve various aspects of cryptocurrency development, such as network security testing, detection, fraud prevention, scalability optimization, etc., while also creating new opportunities for innovation, such as chatbots, smart contracts, prediction markets, etc. Conclusion: cryptocurrencies are digital assets that use cryptography and blockchain technology to enable decentralized and transparent transactions that have grown rapidly in popularity and value, but also face many challenges such as security risks, environmental impacts, investor caution, and regulatory uncertainty. The future of cryptocurrencies depends on how they can overcome these challenges and innovate to meet the needs of various sectors, industries, governments, and individuals. Cryptocurrencies have the potential to transform the global economy and society, but they also require responsible and ethical development and adoption. That's all for today's video. Remember to hit the like button, share this video, and subscribe to our channel for more exciting content. Thank you for watching, and we'll see you at the next one.